This is London with Bitcoin Spike VIP Trader Capital Management, dealing with and investing in a highly volatile coin or asset such as Bitcoin. Former hedge fund owner here, guys. Private, non-SEC, not financial advice. Take a look at what I have on the screen. I have a GAN box. I want to talk about levels and gradients of exposure, discussing from the top-down approach if you had managed your futures appropriately, talking about a potential here for an increment of 10% exposure increase in the market, a 10% exposure increase in the market. Now, I know that we trade. In terms of the pickup on the bottom right, you see a nice capital line shift in momentum here to the upside. Currently, we're dealing with what? An ascending triangle. Yes, we trade patterns. Yes, we trade lines of support, resistance. Our specific fire and ice, which caught the bottom of Bitcoin on the daily with a green buy line, was a perfect entry. In terms of this specific level, boom, 3.72% over that on the candles, but right back into that top line resistance feature, the 200 exponential, 200 simple weekly moving average, just so that you know. In terms of and we've been talking about that specific level, yes, we have the indicated ascending line of support, flat top resistance. On the 30-minute time frame, you'll find a nicely conformant ascending triangulation along that level of resistance. Now, important, back to the issue at hand. I want to talk about the top right feature. You're seeing the bottom of Bitcoin here as demonstrated on the 8-hourly. Why do I have this flashing? Why do I have this arranged as such? You could view it in reverse if you choose to view it in reverse, but these specific arcs, the arcs that you're looking at right now, they have the potential to demonstrate to you different levels of capital exposure, which you may want to compound. Pay attention from that high feature as a trader would look to start expanding and encapsulate their specific or represent their specific level of exposure in a volatile market. A trader may want to, let's say, initiate a plan of multiple exposure or multiple levels of capital exposure based upon a level or a sense of leverage, a notion of leverage. A trader may want to, let's say, pick a target price to quote unquote cover the field down to, let's say the trader wanted to cover the field down to $6,000, apportion their capital down to a level of, let's say, $6,000. Okay, this would have been ahead of time. This would have been in this zone level of resistance carrying down a feature. Now, the trader would likely thereafter choose not only a target low for a sum of capital, but the trader would choose a level of a degree of leverage, that the trader would look at and say, well, I'm going to choose, let's say, a 10% increment, which could be relevant on any level or any gauge of leverage that the trader would want to engage in. But let's say that the trader decided, I'm going to calculate in through the current level here. I'm going to say at a 10% drop, maybe I have an exposure of, let's say, $1,000. I have $1,000 of exposure at a 100x. $1,000 at a 100x at 10x. That would cost me, if the market were to move against me and I want to cover the field below, that would cost me, let's say, to calculate out at 10x, $1,000 at a 10x, that would cost me $10,000 if the market moved against me as it just did at this 10% drop here. Let's say I'm contemplating a level of support hit down to this level. I'm going to the hypothetical trader, cover my specific level of entries at a $2,000. Let's say I wanted to deploy a $2,000 level at 100x. At this level, 10 grand would be my exposure top level. $2,000 would be my double down or my increased multiple level of exposure at the 100x. Boom, in this level. After the 10% drop, I'm going to step it up and hit the market with 2,000. And I'm prepared, would say that hypothetical trader, for an additional drop of 10% at that level, which would cost me, this says the hypothetical trader, which would cost me a $20,000 level of exposure at that level. Pay attention, guys, as we look at the technicals, and I'm trying to bring you guys a different framework of thought in terms of covering the field with an increased level of exposure based upon your leverage. Spot traders, we love them. Love spot traders, guys. Great tools for spot traders. So looking at the details, the trader would say, fine, I'm willing to be exposed at a $10,000 level here to have some exposure to the upside. Then I'm willing to have a $20,000 level of exposure, not at that first 10% drop, that next 10% drop. That would cost at a drop here of an entry of $2,000 at 100x would cost that hypothetical trader, what? $20,000. Let's say the trader says, well, no, I've scheduled in, bam, right here. I've scheduled in a specific entry of $3,000, increasing my demand for the product as the price goes down, willing to operate in line with basic economic principles. The lower the price, the higher my demand. You guys got it. So let's say that trader calculates out through and says, at this level, I want $3,000 level of exposure. Now, I probably would say that hypothetical trader do a cut and release or a catch and release, like you're fishing, catch and release. In terms of, I would release that $1,000 100x position. You guys got that 100x, meaning 100 times leverage position in this zone. I'm going to catch my underlying trade for 2,000. I'm going to release. Why would I increase? Well, said the hypothetical trader, because I did technically lose the specific $10,000 in this zone. So I'm going to increase. I'm going to throw at the market a little bit harder. Now, what is this whole philosophy built upon? If I were to stair step down into, and let's say I have an exposure of 2,000, exposure after I catch the 3,000 level of exposure at 100x and release that 2,000. If I were to catch a $4,000 level of exposure, you guys got it. Think about this, a 4,000, then a 5,000. Well, that's going to cost you 10,000, 20,000, that'd be 30, then another 30,000 here, that'd be 60, another 40,000 here, that'd be 100, right, 100,000. And then here, you're going to tack on 50 grand if we could get down to or and below that specific preceding low on Bitcoin. What does this mean? Why would you be talking about such a thing? Well, the whole premise is built upon what? First of all, understand that the amount that you would regain, please pay attention. The amount that you would regain, I want you to do one simple thing. I want you to measure a percentage loss. The percentage loss from this intermittent high to the low is 37%. 37% has been lost. What is the measurement back to that same level? Well, pay attention. To get back to the same level, the gain is 60%. Pay attention. Think a moment. The loss involved in this equation was 37.34%. The gain to get back to that level, based upon your measurements, is 60%. So you mean to tell me in the markets, as a matter of fact and a fundamental principle, in the markets, when you lose, that the recovery to the same spot in the markets will actually be a bigger percentage gain? Is that the way it works? Would say the hypothetical trader. I think that, yes, that hypothetical trader would find out the maxim and the premise in the markets that anytime there's a loss in the market, anytime that a recovery to the specific preceding level is going to represent a greater gain than what was lost. That is a primary principle of this specific element that you would see in terms of increasing your exposure to cover upside losses. Now, what is the fundamental principle that you would look at? And I'm getting this to the VIP on President's Day. I hope you guys are doing well. I'm a big fan of President's Day. That's the bottom line. You'd be like, why is London going through this? I'm a big fan of President's Day. So in terms of this feature, in terms of covering the field, how deep can you go on this theory and in the trajectory? The most important part is what you're recovering. You lost 37%. Oh, me, oh, my, I would say that hypothetical trader. I know that's awful. The entire approach here is built upon what? It's built upon the recovery. If you have a recovery to the preceding price, this would say that hypothetical trader is very, very interesting. In fact, I want to deploy some cash at it. Would say that hypothetical trader. You guys know this is London, former hedge fund owner, private, non-SEC, not financial advice. Go to your broker. Run this by him if you want to. Run whatever you want to by him. But this is the notion that traders right now who miss the bottom, now our indicator caught the bottom, okay, on the daily buy line. But traders who are showing up with the opposite approach, instead of scaling in, instead of, I'd say, increasing their exposures, the price would go down, and planning for any kind of a lower level they could possibly get, not just here, but at any specific time, making sure they can cover the field in whatever they're trading. Now, the trader can show up, maybe let's say that hypothetical trader who's not burst in a level of exposure covering the field to the downside, right? Heavy cash reserves, still participation, right? And why would it make sense to have $1,000? How could you have $1,000 100x? Huh? Well, you probably have. A sophisticated trader might have levels and compound, guys, a compound ability to participate in a highly volatile asset. Bottom line. We love this stuff, guys. Double down. Now, as you would look at this, the premise is based upon the recovery. You guys got that. 100%, you got to get back up. The 37% drop versus 60% recovery doesn't make much sense unless you're going to recover. So that's the risk in this. You say, that sounds too good to be true, right? Might think that hypothetical trader. The bottom line is this: as I prepare our traders and myself for a potential, and we'll get back to this level of thought, guys, that discussion framework of stepping down at 10%, that 10 grand, 20 grand, 30 grand, 40 grand, 50 grand. We can get back to that, but I want you to tread within reason in terms of your own levels of exposure. Do you have a strategy behind it? Have you calculated your losses in terms of your level of exposure? Because what's going on right now is people look at the Bitcoin market and start to think, my gosh, I missed it. I need to go in large. I need to go borrow money. A lot of people think they need to borrow money to be involved in the markets. No, thank you. No, thank you, right? When you show up late and you want to know and you're so panic-stricken, is it going to go up? Is it going to go down? Do you think it's going to go back down? Do you think it's going up? When you're approaching with those questions, I always ask the person, did it just go up or did it just go down? Well, it just went up. That's why I'm asking, is it going to keep going up? Well, what happens? That person missed the move. If you missed the move, what's your move? Don't show up late to the party and act like it's going to revolve around you guys. Some people don't take kindly to that. Some people just don't take kindly to it. Oh, you want to know now if it's going to go up, if it's going to go down. Go do the homework. Get involved with your technicals. Work with the features in terms of the fire and ice. Beautiful byline on the green byline on the 4-hourly. Beautifully well done. We're excited about that move. We're excited about the fire sale line in the 4-hourly that we got. Boom. Nicely done in terms of these preceding features. Guys, exciting to bring you a little bit of a different framework. And yes, literally just because I like President's Day, it's a great thing to be in the USA, doing a little bit of crypto. Great to have an international reach. Shout out to our Australian, to our Scottish, to all the international VIP traders that we have in our group. It's a great day. And yes, as you look at the ability to participate down to this level of support, what would it cost you? Have you calculated at least your losses to get down to a level of support where other traders, let's say that hypothetical trader, is sitting there saying, yep, I'm going to sit at every level of support while Bitcoin decides to do what she decides to do, and I can't wait to get here. Okay, so if you're on the other end of the spectrum and so sky-eyed and starry blind that you can only see a moonshot, I'm going to tell you, you're going to miss. And if it's not this hit, it's the next one. And if it's not the next one, it's definitely probably going to be the next or the next one. Where if you're unidirectionally oriented here, we have a great inverse head and shoulders. We have a nice left shoulder, a head, a right shoulder. It's looking fine. But in terms of risk management and control, I'm going to be the guy while we're parked at the 200 weekly moving average to bring you a little bit of extra sauce on the side of that ribeye. Huh? Something. It's a holiday. Hope you guys are cooking out. We had a great steak last night. But in terms of that, I just want you guys to think a little bit out of the box. Think a little bit deeply as you construct your level of involvement in the markets. And I'll tell you guys, this is London, former hedge fund owner. If this type of information is interesting to you, you watch the channel and be like, hey, finally, somebody's talking about something that I do. Hey, welcome. I'll tell you guys, no matter where you're at in the world, if you're in Dubai, Middle East, if you're in America, wherever you're at, South America, tell you guys from here to Hong Kong, all the way around the world, this is London, and we are VIP Trader, a Bitcoin spike. We catch the bottom. Yeah, we catch the bottom. Summer 2021, who caught it? Hey, that would be us. And now, building an indicator that caught it on the green byline. Hey, guys, that's what we're all about. Hope you guys are doing well. Join from a desktop computer. We'll talk to you soon. A little bit of structuring, a little bit of compound, a little bit of you guys hustle and make sure that you have the ability to, I'd say, defend your current position. You got a $10,000 on a 100x, or if you got 20,000 on a 100x, compute your losses. Make sure you're not going to disappear in the next week or 2 weeks. That ain't VIP, guys. That's not our group. A lot of people attract a lot of attention, everything else. They got guys losing right and left. We got ability to stay the course and stay in the game. That's all right. That's all right. That's our MO. We'll talk to you guys soon. Thanks so much for your time. We'll be into back trading. And since we talked about it, take a look at the trades for our group. 165%. Boom, beautiful. 146%. Those would be JMac. 206%. That would be Steve-O. I think that's Steve, right? Steve, way to trade, my man. Beautiful trades. In terms of Venus, look, so many. 148, 100%, 330%, 190%, 121%, and carrying that King Kong. What is that? 1,400, about a 14 or 15x long. Nice trade, Venus. Nice entries. And some of those are long. Some of those are shorts. Here's a short here that you caught yesterday. Beautiful catch on that over that 200 weekly moving average. This is London with VIP Trader and Bitcoin Spike. We'll be streaming. We have a holiday today. It's President's Day. Shout out. Hey, we'll talk to you guys soon. Take care of yourself. Never overexpose any higher price. This is London with VIP Trader and Bitcoin Spike.